Hey, Brew Crew, you know who it is. Welcome back to another edition of the Trade Update. Diving right in. Today I made an adjustment in Apple. Just watching the internals throughout the first couple hours of trading, I felt how slow the tempo was as Apple was doing its slow motion breakout. So basically, I decided I'm comfortable selling a call vertical with the short strike up at 490, and I just bought a garbage call up at like 520 for margin relief. This adjustment took in a 60-cent credit and basically makes it so that if Apple never gets close enough to the 475 long call, if it tanks or hangs out sideways, no harm, no foul, because the trade is now at a zero debit, and that's what I like. But I still have the possibility of seeing the spread expand if Apple decides to make a run for it throughout the rest of the week. Now, this means I'm short 3 of the 490 calls, so it can't run hard. Otherwise, the 490 short calls are going to expand very quickly. But honestly, with very little time left till expiry and with the long 475 call in front of those short 3 490 calls, the upside risk should be fine. Looking at the options chain just to make sure though, we can get a rough idea of how much a 15-point wide 1/3 call ratio is going to trade for if Apple does get near 475. To do that, let's just take a look at the 465, 480 1/3 call ratio, because this one is also 15 points wide and is pretty close to where Apple is trading now. The 465 call is trading for about $3 and the 480 call is trading for about 50 cents. So that spread right there is $3 minus 50 cents minus 50 cents minus 50 cents or $1.50. Basically, Apple is trading a few points below 465 and that 15-point wide 1/3 ratio is trading for about $1.50. So we can approximate the same if we just shift the chain upwards, that if Apple trades a few points below 475, then my current 1/3 ratio will also trade for about $1.50. So TLDR, there's still room for the spread to expand in my favor, even with a run up. And if that doesn't happen, again, no harm, no foul. All right. Switching over to CHWY, a bit of an inside day today, so we're working off the froth from this big move up, which is fine. Again, we have the calendar along with a half a unit short of the 65 call for next Friday. Ideally, we touch 60 this Friday, but I can't make that prediction. No one can. But what I can do is prepare for the downside. I feel like selling more of the 65 calls for next week might be possible to reduce the debit further, but it's not going to help reduce it all the way to zero. And that's fine. Not all trades can be reduced to zero or to a credit, just as long as I do my best to reduce it. Anyway, we'll see what happens there. So that's it for the trades I shared. A couple of other ones we have going on in the chat room is Adobe and Tesla. Adobe is just hanging out sideways today like many others, which is fine. Tesla as well. With Tesla, it's basically a free trade for us at this point. We basically bought back our short put vertical yesterday, which covered the cost of our call condor spread that reaches max profit anywhere between 2,000 and 2,200. Now, there's some value to the call condor spread right now, but even if it doesn't work out, we walk away pocketing a bit of premium on the whole trade anyway. Obviously, we want Tesla to rally to 2,000 by Friday for that home run, but we'll see. All I wanted to point out here is that it does feel nice knowing that we managed this trade to be a winner, even if it doesn't get to 2,000. And a quick look at the markets. So it's pretty interesting that yesterday we closed above the balance area high and today we closed below it. So combining the activity of the past 2 sessions as one, overall, you could look at this as a look above and fail pattern. However, I think if anyone's looking to short this, it's going to be pretty hard to target the other side of balance, which would be around 33.53. And I say that because you have all of this good structure that is here and the sellers would have to chew through a lot of this. So just be careful shorting. I'd say the stop would need to be above this balance area high. First target being balance area low at 33.53, and then monitor for continuation down to the 33.10 level. Another thing I wanted to look at is Dixie, the dollar index. This one is your classic H pattern where you have sellers trying to push this lower below the breakdown level, but they're not getting any follow through. So what do? They have to cover. And that's what we're seeing over here in this large green candle. And this typically results in a very nice bounce trade. I think there's some room for this to continue higher. And since stronger dollar typically means weaker precious metals, I'll probably be looking for something to do in either silver or gold to the downside, maybe in the form of put ratios expiring this week with the sweet spot around some level of moving average or support. All right, that's it for today. Hope you found this video useful. As always, if you have any questions or comments, feel free to leave it down below and feel free to join us by checking out the links to our Twitter, Discord, and Twitch down in the description below. Again, they're all free. We share our thoughts and setups and analysis and trades, entries, exits, all that good stuff, all that good commentary with each other. But for now, stay safe, Brew Crew, and we'll catch you in the next video. Cheers.